It was a great day for the U.S. stock market as unemployment claims fell to their lowest level in over a year. All of our major indices advanced. In fact, they all flipped back to a bullish posture all of a sudden as well from an intermediate perspective. We had most of the sectors advancing today with the exception being energy, but I really like the way that healthcare and real estate were shaping up after today's activity. So we'll review all of that, and then we'll get into our trade application example where I wanted to focus on a stock that's been bombed out from a dramatic event from a couple of months ago, and it has me wondering if it's about ready to kind of stabilize and maybe start heading higher once again. So with that, let's go ahead and get started. Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee. It's May 20th, 2021. First of all, if you're new, welcome aboard. Remember to go over to YouTube, click subscribe on our channel, go down to our description area, and sign up for our email distribution list. We're also heavy users of Twitter. I would encourage you to follow me at Brandon Van Zee if you're not doing so already. Only got about 70 more followers to go until I hit that 10,000 mark. So I appreciate all of you out there following my activity. And then last but not least, we do have a presence on Facebook as well. Feel free to join our group at that web address you see in the logo in front of you. All right, let's go ahead and jump into today's trade activity. And as you can see, I've got a little bit of a different chart pulled up here. This is chart 6D, and I like to pull this chart up whenever we have a movement of more than 1% up or down. Today was of the good variety, the up 1% move. Now, it wasn't up by much more than 1%. Nonetheless, it does qualify. S&P 500 was up 1.06% today. So you can kind of get a feel for how that looks on this graph. Notice this green bar gets up and over the blue line here to give you a sense of how often 1% moves have been occurring. Now, those of you that have been following these presentations long enough will know that this chart is looking quite a bit different than it was even just a couple of months ago. And the reason behind that is these bars have normalized. Remember, for the longest time, because of the extreme activity that we had in February, March, and April of 2020, everything was kind of ballooned in just that area, and it made everything else look like a tiny little ant. Now that we've passed that 1 year anniversary on this chart, that's no longer visible. So now these movements on the green and the red portion in the middle are much more natural, and you can see them make them out a little bit better with your eye. So anyway, you can see that we have had a couple of 1% up days here about a week ago, but that did follow. Those two 1% up days followed a pretty nasty 2% move lower in the day prior to that. So you can almost think of those as a makeup candle. And you might even be able to make that same case here. We did have 2 down days in a row here. Today's activity was nice, but we have to keep in mind perspective. If you look at the S&P 500 chart up here, while we were having a nice robust day today, it basically just puts us back in alignment with where we were 2 days ago. So kind of just a makeup day more than anything. However, we'll talk about this in a little bit as well when we get to the normal 4 grid. One thing I did like about the move here today is that we do have a bit of a higher low that has been established, with yesterday's low being the case and not quite breaching the low that we saw back there on May 12th. So whether that comes into play or not going forward, we'll see. But I do think it helps support the current bullish posture that we see using the intermediate line on the market forecast technical indicator. And again, I'll show you that here in just a little bit. But before we get to that, let's also kind of get a sense of breadth. First of all, notice the VIX did fall today. It fell back down to about 20 or 21. That's fairly normal. Remember, when we have a big up day in stocks, volatility and aka the fear index, the VIX, usually falls. The opposite is also true. So one of those days where we kind of fell back down on the VIX. So for those of you that have sold options contracts in the past, all else being equal, that drop in the VIX benefited your trades that you already have on at this moment in time. Let's take a look here at our Market Watch tab briefly. I wanted to show you in the index watch area. I've pulled up the S&P 500. And you can see here that we had 3.5 stocks up for every 1.5 stocks down. So a pretty strong breadth today. It wasn't nearly as strong for the bulls today as what we saw for the bears 2 days ago on that big sell-off, but it was still a pretty robust day, and we'll take what we can get at this point because the market has gotten choppier here in the month of May, and it's gotten a little bit unwieldy in a couple of areas. And so to see these types of days be supportive of bullish activity, I think that helps the bullish thesis overall. Let's go ahead and now jump back on over to our normal charts, and we'll get started with the process on chart 4B here, which is our 4 grid for the normal market forecast. And so as we're pulling this up here, you'll notice that we do have green background colors all of a sudden on all 4 of these charts, which is nice to see. I mentioned that possibility, by the way, on the Russell 2000 when I did the video on Tuesday. I said, well, this line down below is so precarious, it could easily flip back to the bearish posture the very next day, which is exactly what happened. I wasn't predicting that. I was just saying that any movement whatsoever could have set that possibility up, and that's exactly what did take place. But equally as important is to recognize that while we did flip to bearish on the Russell 2000 yesterday, it was still very flat down here on the green line. And therefore, even a normal-sized up day like today can push that posture back into bullish. This isn't normal, by the way. Some of you that are newer to the video might be wondering, well, is this typical behavior where you move from posture one day to the next being different? Not really. This is a choppier period. Remember, this posture setting mechanism is hoping for good trends. And you can see what that would look like as an example with the Dow Jones up here, where you see that background color green consistently for long periods of time. What we see down here with the Russell 2000 is a little bit more abnormal because you're kind of trendless, or if there is a trend, it's a sideways trend, right? So it's hard to say, well, we're strongly bullish or strongly bearish, because really we're kind of blowing with the wind at this point, trying to discover which direction the market wants to go. But let me right click on this Russell 2000 chart and maximize it a little bit more, because this move we saw today, while it didn't feel like much probably to most people, remember the Russell 2000 actually lagged the normal market today. The Russell 2000 was only up 0.64%. But what I will say for it is that this green line had a little bit more of an oomph today. Notice the last 2 days down here was kind of hard to make out with the naked eye whether it was going up or down. It kind of looked flattish the last couple of days on this green line down here. This is a little bit more obvious jut higher here that we are seeing on the green line. So I'm a little bit more optimistic this time around that maybe we can lead to some more bullishness here. Now we'll have to get up and through that moving average, and that is going to be a bit of a test. Notice here that we had this candle a couple of days ago where we went up, kissed that falling moving average, and then pushed back down. So it was used as a resistance area. So we already know that that possibility exists right there. But I do like the behavior that we saw here a little bit better. I'm a little bit more optimistic this time around because yesterday we had that long lower shadow and we were able to protect that prior low. Right? A lot of times when you see this kind of behavior where you have this overshoot to the downside, a reversion to the mean where you go back up and kiss that falling moving average, and then the next day kind of looks like that, another red candle, your thought is starting to become, okay, are we going to break through those prior lows right there? And I think today was actually quite a positive day, all else being equal, where we stopped that progress or that process really early on in its tracks. Had we gone down here and breached this again, then yes, we're kind of setting ourselves up with that possibility of continuing to have those reversion to the mean moves higher, only to fail over and over again and create new downtrends. But this sets up the possibility that maybe this is going to be a higher low that we established yesterday. That might give this candle some oomph to get up and through that moving average maybe early next week at some point. So we'll keep our eye on it, but I will say that I'm a bit more optimistic on the Russell 2000 today than I had been in previous weeks. And remember, I have been bearish on the Russell 2000. In fact, with tomorrow being options expiration for the month of May, remember we've got that contract that I think is expiring over here. the IWM. Remember, we're trading the ETF on the Russell 2000, which is the IWM, but we had that 228, 230 bear call spread right there. And as long as we stay below 228 tomorrow, that will expire worthless, and we'll capture maximum gain on that trade. And of course, with it trading at 219 right now, I don't think any of us have anything to worry about there. It's going to stay below 228. So after this week, I don't even have to have any pressure to feel like I want to be bearish on the Russell 2000, because my bearish trade will roll off of our books at max gain. Now, in addition to that, I also wanted to point out, take a look at the PL open column. We don't have any losing trades in this particular market forecast, market outlook account here. Naturally, David and I have our own separate accounts, but so there might be some differences over in David's accounts. But what we can say is that any of the trades that we've placed officially in this presentation for my videos here recently, we haven't had any losers. Now, there's some that are just barely winners, but nonetheless, we've been hitting it pretty good. Remember, this NWN trade is a trade from a while back where it was a covered call. The covered call portion of it has already expired, but we kept our 100 shares of that stock. So that one's done pretty well because I figured it was a good dividend setup going forward at that time. These other ones are a little bit more recent down below here with the options activity that we've done along the way. I think we have a couple of others, by the way, that are going to expire tomorrow as well. I believe iHeartRadio, that sold put that I did, expires tomorrow. Yep, we've got 1 day left on that. We sold the $15 put. It's trading at 22. So unless it falls $7 per share tomorrow, we're going to capture max gain on that trade as well. And then this one I was really happy about. Intercontinental Exchange, ticker symbol ICE. Remember, this was an iron condor that I did. I don't do a whole lot of iron condors, but in this case, I felt like it was worthy of consideration. This one was a very unique experience, to put it mildly. This one really tested our patience on both the upside and the downside throughout the life of the trade. But with it trading at about 112 right now, as long as it doesn't fall $2 per share tomorrow to threaten our sold put, we should be in great shape because it's not going to close above 120 in all likelihood. Now, to see what that looks like on a chart, because it's kind of entertaining to look at. I had mentioned this in another class earlier today as well, where initially when I put the trade on, somewhere back over here, I was getting nervous on the upside. Now, I didn't freak out and have a knee-jerk reaction and liquidate it at a loss or anything like that. I decided, hey, let's see if the original thesis can play out. So it's rather funny that I went from being concerned about the top side of our iron condor to just yesterday starting to become concerned about the bottom side of the iron condor as we nearly touched the bottom blue line in that case. Remember, with an iron condor, you want the trading activity to stay between the bands. And so normally you would love to see it trading right in the middle the whole time, so that way you don't feel nervous about your trade. This one made me feel nervous on both ends, the top end and the bottom end, but hopefully tomorrow it ends with a very good ending to that story at max gain for that iron condor there. So anyway, this is a rare time where all of our trades have been winners that we put on for this particular presentation. It's not always going to work out that way, obviously. There's plenty of times where we make losing trades. That's the nature of the beast in this business. But if you felt like the last, let's call it, month or two have been difficult for you, first of all, you're not alone. There's a lot of people, if you take the temperature of people on Twitter, they're really struggling right now. They're in the wrong areas of the market, and they're feeling intense financial pain right now due to the trades they've been placing. I am happy to report that is not the case here. For those of you that feel like you've got benefit out of watching me place these trades and walking through my thoughts on these trades, I ask one simple thing out of you each and every time I do these videos: just click like. The more you do that, the greater the chances I'm going to continue to do these videos. As long as I continue to do the videos, I'm going to continue to look for good trade setups. Now, keep in mind, my normal job is not to do these free YouTube videos. My normal job is to teach premium classes to our students. So if you are somebody that is serious about stepping up your game from an educational perspective and want to see our best trade setups that we set aside only for our paying members, we would encourage you to check out our services there as well. And remember, you don't have to attend those classes live. We record all of our classes, and we even have a trade alerts feature, so that way we send out a trade alert anytime we're placing trades for our class portfolios. But if you're interested in stepping up your game from an educational perspective, come on over here and come to our pricing tab on our website over at marketscholars.com and kind of read through the various things that you would receive from either the plus or the premium areas there. So anyway, forgive me for taking a step there to having a moment of celebration, because this is a very rare situation where we've got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 trades on right now, and not a single loser in the batch, which is pretty cool. Pretty cool. Hopefully we can keep that up as best we can going forward. All right, let's get back on track here with some of the other charts. Let me get back to chart 4B here. And wanted to point out that the S&P 500 not only got its bullish posture back, but we also have the green moving average showing up all of a sudden. So that's a nice attribute there as well. We have kind of a double bonus, as it were. We went back to a bullish intermediate posture, and we've got a green moving average telling us that the path of least resistance continues to be to the upside. Can make the same claim for the Dow Jones Industrial Average, but as I compare those two together with my eyes, all of a sudden the S&P 500 looks a little stronger. Remember, that's a little bit of a change of tune, because about 2, 3, 4 weeks ago or what have you, I would have told you that the Dow Jones looks stronger. But in this last little 2 or 3 week period here, I think you've got a little bit more edge going towards the S&P 500. Notice that the moving average line on the Dow Jones looks a little bit more flattish. There's a little bit more upward ascent there with the S&P 500. You can also use the intermediate line to help you gauge that. If you can't see that quite as easily as I can with my eyes, remember, one kind of shortcut is just look at where the intermediate line is. And there's these labels in here that will tell you where it is currently. With the S&P 500, the intermediate line is at 51 and rising. With the intermediate line on the Dow Jones Industrial Average, it's at 44 and rising. And so, that's an easy way for you to say, okay, well, I'm not exactly sure what my eyes tell me, but according to the intermediate line, we have more strength in the S&P 500. And I do agree with what I see visually there as well. So good to see both of them back to bullish postures. We have a strongly bullish posture on the S&P 500 because it's above 50. We have a weakly bullish posture on the Dow Jones because it's not quite above 50 yet, but it is rising between 20 and 80. With the NASDAQ, we also flipped back to a weakly bullish posture in this case, because the green line exited out of the low reversal zone above 20. It's at 25 and rising right now. So because it's between 20 and 80 and rising, but not yet above 50, that's where that light green color comes into play, suggesting that we have a weakly bullish posture, not a strongly bullish posture. Notice you do have a red moving average on the NASDAQ still, so it is not as strong as the other two charts on the top, because we are starting to see the averages rolling over here. So we got some work to do to bend those back higher again. And you can make the same claim for the Russell 2000. It also has a red moving average. Price is below a falling moving average at this point. And you also have that light green background color, suggesting that we have a weakly bullish posture here, not strongly bullish, as we are kind of bouncing higher in the green line up and towards 50, but not quite there yet. We're at 35. So right now, the only chart on the board that does have a strongly bullish posture is the S&P 500, and I would tend to agree with that. I think that's the chart that does look the best out of these four to my eye at this moment in time as well. Let's take a look at the three green arrows here briefly and see if we had any changes there. Not a whole lot. Right now we are in a situation where all of our charts have conflict, and what I mean by that is none of these charts have either three green arrows or three red arrows. All four of these charts have a mix of green and red arrows. of various varieties. With the S&P 500, which was our strongest chart on the prior view, this one has 2 out of 3 green arrows, but we still retain the red arrow on the MACD histogram. You will notice the MACD histogram is rolling back up towards the 0 line, so it might not be that far until we get that opportunity, but I don't think it's going to happen tomorrow at the same time, just to be upfront with you. That's still a pretty big gray bar there to immediately flip back over that 0 line right there. So it's a good start where we've seen some of that bullish momentum start getting back into the system, but we're not in kind of like that breakout territory in the market yet either. So we don't want to get too ambitious at this point. We still have a little bit of work to do before we get to, where that old all-time high was on the S&P 500 at 4238. Let's take a step away here, go over to the internet briefly. I appreciate all of you that click like and retweet for me on these market outlook related videos. Remember, that is part of the motivation of doing the videos as often as we do, is knowing that you guys like the videos and you want us to do them as often as possible. And if you're not clicking like, we won't know that. So if you want us to continue to do the videos as often as possible, keep up your end of the bargain. All it takes is 5 seconds out of your day. I really appreciate not only my 9,936 followers, but in particular the 110 of you that were willing to click like for me when I did the video on Tuesday. So too many names to go through here, but if you see your name out there, I appreciate you. Valerie and Barb and Luke and See It Market, who's one of our great partners, by the way. Check out their work when you get a chance. Claire and Julie and Brandon and Kirk and Adam and Ray and Gerald and Ann and Craig and Paul and Ken and Surendhar. All of you guys are amazing. We really appreciate that. Thank you so much. Also, while we're over here, a reminder that Thursday is the day when I teach my question and answer session for my premium members. So this particular class is one that David and I each teach. He teaches his Q&A class on Saturday mornings. I teach mine on Thursday mornings. But it's kind of like an Ask Me Anything type of a session where if you want direct insight from David and I based upon things that you're looking at or that you are questioning, or trade setups that you have or what have you, then that's your opportunity as a premium member to post those questions to us. So today in my class, I took a look at steel dynamics and some of the insider sales that have been taking place there lately. We talked about the amazing move that we've had on Target here recently, and a smaller company called J&J Snack Foods from a dividend perspective. We also had a conversation about AT&T and how to handle a position like that if we anticipate that they are going to be cutting their dividends, which is a high likelihood based upon the news that we learned earlier this week. We also had a conversation about Verizon versus AT&T and which company is more solid. We also had a conversation about the money flow indicator on Thinkorswim and my thoughts around that. We also had a conversation about AGM, which is an agricultural mortgage company. And then we also had some commentary around our short put position in Kellogg. So that just gives you a little taste of the things we talked about in class there. If that strikes your interest, that's why we have these timestamps on here. So that way you guys can fast forward directly to the answer that you want to hear, again, if you are a premium member of Market Scholars. And then David taught his portfolio management with ETFs class earlier today. He does a fantastic job with that class, so make sure you check out his recording as well. And then tomorrow, he's got his technical analysis class. I think he did rearrange his time on that, so be aware of that. Check your email if there's been any updates there. But I think he's going to be teaching that a little bit earlier than normal tomorrow because he's got some other things going on in the afternoon. But he always does a great job with his technical analysis class there as well. All right, let's get back on over here to the Thinkorswim platform and check out some 12 grid analysis now. And so let's start with chart 5A. This is our asset class 12 grid. And as we're looking at these, you can see there's a mix of kind of green and pink background colored charts here, and that's normal. Remember that this particular asset class 12 grid is going to have a wide variety of financial instruments in it, and so it's almost always the case that there are some that are strong and that are some that are weak, because it's not a situation where they're all stocks or they're all bonds or they're all commodities or something. There's a mix of all that kind of stuff going on here. But as I look at this particular view at this moment in time, There's one chart that really stands out to me bullishly, and that chart is gold. I mentioned this on Tuesday as well. I'll reiterate it right now that I'm impressed with the way that gold has been performing. It's really interesting to see it perform as well as it has while the cryptocurrency world has started to plunge, because it was the exact opposite earlier in the year. In fact, you can see Bitcoin off into the right-hand side here, kind of in the middle rung. And if you were to compare this chart to the gold chart, notice the differences. Back here, these are 3-month charts, by the way. In the first portion of the 3-month chart, you can see Bitcoin was rising nicely. Every single week it would go higher. Meanwhile, over here on the gold chart, it was going lower pretty much every week during the first month and a half of this 3-month chart. And then about a month and a half ago, those roles reversed. All of a sudden, people were starting to become a little bit more cautious around Bitcoin, and Bitcoin kind of topped out here on April 13th. And during that same time period where Bitcoin has really been falling tremendously, you've seen some enthusiasm going into gold at that time. And as I mentioned on Tuesday, I'm particularly happy about the way that we have approached gold in this presentation. I speak mostly for myself because I don't get a chance to listen to all of David's presentations, but I'm sure he would be saying the same thing, which is we have been all over this. And that is it's not all that typical of me to be as bullish as I was on a chart like this as early as I was. And what I mean by that is usually I am more cautious around a chart that is trying to turn around but hasn't yet done so. In the case of gold, I was going to be a little bit more ambitious there, where I felt like it was worth taking bullish trades on. In fact, we did. A trade that is already done because it's already hit our price target was on that Goldfields company. And so I am really happy that I made that decision there, because a lot of times when charts look like this, I'm going to be more hesitant and I'm going to play it safe. I'm going to wait until there's more robust activity to get bullish. But in this case, as soon as it got above that rising moving average, we did go bullish on gold, and we've kept up that behavior on it ever since. And I think it has been of benefit to think of gold in bullish terms during that time period. It hasn't been a straight line or anything like that, but I am happy with that reversal that has taken place there, because remember, gold was out of favor for many months before this chart as well. So you have to be kind of ambitious to say, yes, we're actually reversing trend here during that time period, and we have had the good fortune of seeing that follow through. Where it takes us from here is anybody's guess. I do like gold as a long-term asset. But of course, it's not going to go straight up. There's going to be plenty of backfilling that takes place along the way. Bitcoin is also an interesting chart in that it's almost so bad it's become good. You can see here that we've got this green dot that showed up. I talked about this on Tuesday as well. That green dot is telling us that we got an oversold cluster signal. And what that means is that the selling pressure became so intense that you got so many people on one side of the ship. Some of you from back in the 80s will remember that coffee commercial. I can't remember which coffee company it was, but everybody moved from one deck of the ship to the other deck, and it was like the boat was going to tip over, right? And sometimes you get that in trading as well, where everybody's on the same side of the trade. In this case, everybody was just capitulating on Bitcoin, where it starts giving you some indication that the future may not be as bleak as what it feels like at that exact moment in time. So after a really wide-ranging day here yesterday with a really long lower shadow, you did have some supportive activity with Bitcoin here being up 3% today. Now, having said that, I would still be very cautious around Bitcoin going forward in the immediate future, meaning the next 2 or 3 months. This could easily get back up to these levels. I think I identified these levels on Tuesday as well, but basically where you were looking at Bitcoin here on the 12th of May and the 23rd of April, if Bitcoin got back to those levels, I would be more interested in selling Bitcoin there than buying it. If it gets up and through those levels, and in particular up and through the moving average, that might be a different story. Maybe there's more robust bullishness behind that move that I would need to adjust accordingly. But right now, my mindset would be this is probably a move that scared the heck out of most market participants in Bitcoin. And if they can even get back part of their money, they might be willing to do that. So I think there's going to be a little bit more of a difficulty for Bitcoin to have the enthusiasm in the next 2 or 3 months that we witnessed earlier in 2021. Then again, I could be wrong. Remember, that's a highly speculative asset class that hasn't been around all that long, so it's kind of hard to ride that buck and bronco. But that's kind of what I'm thinking in my head right now, is that we overdid things with the selling to the downside. We might have a momentary reprieve back up to the upside, but I'm not anticipating this going back into an uptrend in the next 2 or 3 months. But if that changes, I'll be the first to let you know that here in these videos. Let's go ahead and take a look at our sector 12 grid now. And this will be chart 5C for those of you that are premium members following along at home with your own charting package that we give you as part of that subscription. So when we're looking at this particular 12 grid, the first thing that catches my eye is how different it looks compared to when I was showing you this exact setup on Tuesday. And the difference is in the colors. Remember, the vast majority of the charts on Tuesday were pink. Today, the vast majority of the charts are green. So it's telling us that the last 2 days of activity have been productive for the bulls, at least if you're using the market forecast intermediate line like we do in these videos here. So the only 2 pink charts on the board are discretionary, which is dark pink, telling us that we have a strongly bearish posture. It's actually in the low reversal zone below 20 right now. And then energy, which has a light pink color, which means that it's a weakly bearish posture, not strongly bearish, just showing signs of weakness here more recently. You can see the last 3 or 4 days for energy have not been good. It's still up 9% over the last 3 months, which is not all that terrible, but it's looking a little bit more concerning that energy failed at approximately the same area where it topped out back here in March. Now, I'm not giving up on this idea yet. This is easily a situation where it needs to come back in and backfill a little bit before making another move later on this year. So be on the lookout for that. We still have a rising moving average. Notice the moving average is green. It's just that the momentum behind oil and gas stocks has certainly tapered off in the last few days. Now, like I mentioned in the intro, there were a couple of charts that I am looking at right now that look really interesting to me because they're different and new compared to what I had been looking at as enthusiastically in the past. And what I'm referencing is the bottom rung here. These are more of our defensive sectors. In particular, I like what I've seen out of healthcare and real estate. Both of those charts, taken all by themselves, look really interesting all of a sudden. You had nice bounces in both of them today. Both of them were up over 1%, and they're both bouncing up and off of their moving averages, giving you the impression they could have another leg higher under the right types of circumstances there. So I want to keep my eye on that. Another thing I'll point out is that there are a couple of major events that take place in the healthcare industry each year. One of them is called Asco, and it's a big conference where a lot of the healthcare companies get together and unveil their findings on a lot of their cancer drugs and other things like that. And I believe that is coming up in early June. And sometimes you see a little bit of a run-up in some of those types of names in anticipation that hopefully good news will be reported at that big conference. So I'll be very curious here with healthcare if we can break through to new highs heading into that event starting in early June. There might be some interesting trend trading setups within the healthcare space as a result. So those two in particular were really interesting to me today, and staples were pretty good as well. Now, remember, in general, when we see that bottom rung outperforming, that's generally not something you want to get excited about because that is showing the market's defensive stature when you've got the defensive areas outperforming. But at the same time, you have plenty of room for kind of give and take between these sectors, so it doesn't necessarily have to mean that's the end of the market rally or anything like that. It just might mean that that's their short-term time to outperform before the other cyclical sectors kind of start playing a little bit of offense once again. So we'll see where it takes us, but I do like what I see from a trend trading perspective with healthcare and real estate. Let's go ahead and now take a look at our trade application example. And for that, I'm going to go ahead and pull up chart 4A. And the stock in question is Viacom. Now, Viacom is noteworthy for being part of a really bizarre moment in market history. And that was early 2021 when people were scratching their heads day in and day out wondering, how in the world could this old line media company go up day after day after day after day? And this is what I'm referencing over here. Here's the start of the year for Viacom. It was trading at around $36. That $36 stock turned into a $102 stock within just a couple of months, which is insane. If you saw that out of, a new internet company or a biotech company or some company that was going to change the world, perhaps there's some justification behind a move like that. But we're talking about CBS here. Yes, CBS, the one that you watch NFL football on Sundays, right? Pretty old school. So it was a bit bizarre watching this week in and week out, not knowing what to make of it. Of course, the news then eventually hit why that took place. And it was because of Archegos Capital. Bill Huang in particular was using ridiculous amounts of leverage to push this stock higher and higher and higher until eventually it decided to issue a secondary offering, which, by the way, I applaud their management team for doing. If you're ever going to do a secondary offering, do it when you think the stock is ridiculously expensive and you're getting more bang for your buck to support your balance sheet for your company. So I applaud Viacom's management team for announcing that secondary offering, but that set off a chain of events where you basically took the leveraged fund of Archegos Capital out of business in short order, in just a few weeks' time, where that $102 stock eventually cratered within just a couple of weeks down here to $40. So that was an awful experience for people who might have been buying it in this time period, but maybe it's an opportunity for people who are willing to kind of wait in the wings until the smoke clears. And that's where I'm wondering if that's where we're at now. It's always hard to say on these charts that have had so much technical damage, but what we can say is that we have seen a lot of these green dots showing up here over the last 2 months. Those green dots are showing us oversold cluster signals. And it's basically telling us that the move that it took to get down to those dots will likely not be repeated going forward down even further. And that is effectively what has happened. So I would call this a successful usage of the green dots. In other words, it did stop going down, right? It started to meander sideways over the last 2 months instead of continuing to go down just like it did to get into those oversold conditions to begin with. So this is an example where you didn't have a reversion to the mean to blow off that steam, but you did have a stock that stopped going down and went sideways to blow off that steam. And so now here we find ourselves with an interesting fresh element, a fresh perspective here today with Viacom. It was up 4.6% today, which is an impressive move for an old line media company, particularly given, some of the negative pressure within media earlier this week as a result of, the Time Warner news and the Discovery news. So in this case with Viacom CBS, you can see that the green line has now emerged out of the lower reversal zone, telling us that we now have a weekly bullish posture. This is the first time today is the first time we've had a bullish posture, according to the intermediate posture, since going back to March. So this is a pretty big event here. Doesn't mean that it'll hold, but it is interesting because a lot of times you're going to see posture change quicker than that. But in this case, it's been a long time coming after all of those oversold cluster signals. Not only that, but we're back above the moving average for the first time since March as well. And so hopefully that will start working on some progress for bulls to the upside. Now, I'm not here saying that this stock is going to go back to those heights. Heck, this stock might not get back to those levels for 5 more years for all I know. But what I am looking at here is the possibility of some sort of a bottoming attempt that's being made here in Viacom shares here more recently. So what I opted to do is what's known as a bull put spread. And remember, trade's already been done. Some of you saw it already when I was sharing the monitor tab before. We did the 38.37 bull put spread. We got 24 cents for doing that trade, which is the 30% return on risk that we shoot for those types of trade setups. And so what that means is that between now and June, I want this particular stock to stay above 38. And if it does, then I make 30% return on the risk that I'm taking for the trade. If it does not, then I'm protected if it goes below 37. Now, just because I'm protected does not mean I would make money in that trade. I would still lose money, but I wouldn't lose additional money if something disastrous happened, if it kept on falling, let's say, down to 30 bucks. I lose money, but I wouldn't lose any more money beyond 37 than I would otherwise. So that's kind of the nice thing, because remember, some people might buy this stock rather than doing a risk-defined trade like an option strategy with a bull-put spread. And if you bought this stock and it opened up one day down at 30, you're going to end up losing a lot more than you probably accounted for, especially if you're using leverage and things like that. Whereas when we do a bull-put spread, we know what our worst-case scenario is going into the trade. And if we don't go into that worst case scenario, we have a decent reward possibility as well. So this is a situation where if Viacom just merely goes sideways for the next month, that trade should be a winner. If it continues to go up like we've seen here in the last day or so, even better. The further away from 38 it goes, the happier I am for that trade. But it does provide a little bit of flexibility where if it does fall from 41.5 here currently down to, let's say, 39, that may not have been a wise decision for a bullish trade, yet I could still make money on that trade as long as it doesn't go down below 38 is what I'm looking at there. So it gives you a little bit more flexibility, and you don't have to be perfect with your entry when you do a trade like that. So that's kind of what I'm looking at. Now, this is a turnaround type of a situation. This is not a trend continuation situation. So understand that this one is a bit more risky than a lot of the other bull put spreads that I tend to put on. But I think the setup is unique enough with all of those oversold cluster signals and catching this as fresh as we did with the change in posture and the first day over the moving average, was a worthy candidate from an educational perspective to teach you here today. Okay, so that's what I had for you. If you got benefit out of listening to my analysis or hearing me talk through the trade ideas, I ask one and only one thing out of you. Click like for us there on Twitter. The more of you that do that, the greater the chance is that we'll continue to do these videos for free for you going forward. So with that, I want to wish you all the best of success with your trades and your investments. Goodbye for now.